Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Kieran Donahue. He's the global head of international financial services at IDA Ireland. We're going to take a look at Brexit's impact on the financial services industry. Clearly something our audience is very concerned about. Kieran, thanks so much for joining us at Market Site. Before we even get to financial services, where are we with Brexit? The narrative has changed even since the couple days you've been here.
Well, we've made great progress. You mightn't think it, but we have. We have a deal agreed, a revised deal agreed between the UK and the EU authorities with a revised political declaration. I understand that the UK Parliament has agreed that deal in principle, but wants more time to scrutinise the enabling legislation. So it looks like we're going to be going for an extension period, potentially up to January.
Oh wow, it's 3 months more than they originally had. Let's talk about the impact of Brexit, whether we have an ideal situation or not. What's that going to do to financial services?
Well, as you know, for the financial services industry, Brexit is bad news. And so all of the hundreds, if not thousands, of financial institutions that use London as a hub to access the EU market, they've been now preparing for 3 years to reconfigure their business to preserve access to the EU market. For them, Brexit actually happened last year. The vast majority of them completed their due diligence. They selected the EU jurisdiction that they were going to hub their EU business out of and secured the regulatory authorizations from the relevant regulators. And as a result of that, we've had a big inflow of additional financial services investment into Ireland.
All right, let's talk higher level here. How will it impact the overall economy, particularly the Irish economy?
Depending on the form that Brexit takes, if it's a very disorderly Brexit, it would be net very negative for Ireland. If Brexit is a controlled Brexit, the impact will be more benign. Certainly some sectors in the Irish economy with a heavy exposure to the UK market, such as textiles, food, etc., they're heavily exposed and there'll be some employment losses and some dislocation in those sectors. The compensating factor will be the incremental foreign direct investment that will come from other sectors and flow into the Irish economy to preserve access to the EU market. But net, Brexit's bad news.
Yeah. So why have so many US companies chosen Ireland as a location for business, and do you think that could possibly be impacted by US tax reform?
So firstly, we have a client portfolio of over 1,400 global firms in Ireland. Close to 600 of them are US firms. So a lot of the leading firms in the US, whether that's Microsoft, whether that's Citibank, whether that's Google or Facebook, they've been in Ireland for many years. They're very familiar with the jurisdiction. They're there firstly to service their EU clients from Ireland. They like Ireland because we're English speaking, we're a common law jurisdiction, we're very close in business terms and cultural terms to the United States. We have a very attractive corporate tax rate of 12.5%, but increasingly what those investors are saying to us, we're not in Ireland for tax. We're in Ireland because you have great people, young, dynamic, highly educated.
Yeah, I want to go back to Brexit for a second because when we hear it in financial media, it seems like it's very black and white, either a deal or no deal. Do you think that UK Parliament, that they can work through something that is orderly?
I believe they can. I think the current withdrawal agreement and the political declaration represents the basis for a much more orderly Brexit. And we know that the UK Parliament has passed legislation to prevent the government from exiting in a disorderly fashion. So I think along a spectrum of types of Brexit, the dial is now towards the end of the spectrum that favours a much more orderly Brexit, and that's good news for everybody.
Yeah, and I also think it's a good thing that banks have already been preparing for this so that they have all these scenarios laid out for them, so it won't be quite as shocking regardless of what the end of the deal looks like.
Exactly. So for financial services groups, the minute that the UK decided to leave in 2016, the vast majority of our clients and the international financial services firms that we spoke to, banks, asset managers, insurers, they said, we're going to presume the worst, that Brexit is going to be very challenging for us as an institution and for our sector, and we're now going to move incredibly quickly to reconfigure our European business. So they've already done that. What they really want now is the certainty of a UK exit, so then they can move on.
All right, and to wrap up here, IDA Ireland, what's the value proposition there?
The value proposition for Ireland is effectively our membership of the European Union, the fact that we have a very young, very dynamic workforce that's increasingly developing very high quality services and products for global groups.
All right, Kieran, thanks so much for joining me at Market Site.
Thank
you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.